Hello, this is Randy Lindsay with Hawkeye Traders. This is Friday, March 13th. I'm looking at the S&P 500 charts. I've noticed that from the past 3 weeks, the markets have gone from an all-time S&P high down over 30% drop down into just under 2,400. Incredible drop, but this is not the time to panic. On the contrary, this is the time for those who have set aside funds for just such a rainy day to start putting it back to work. This is not a time to run. I know it's painful. It could be scary. It just doesn't feel right when the markets are this depressed, but this is starting to show signs that this is a floor support and we need to start looking at maybe accumulating back into these markets. Why, Randy? Well, if you look at our supply and demand zones, we can see that there is a very strong confluence zone in this same area, just under 2480. You can see that there is a daily, there is weekly support, and there is monthly support with a strong monthly trend line back down to this level. If we look at the longer term monthly trend, you can see that this bear run simply has a healthy correction back to its normal trend line. So you can see these corrections have occurred several times in the past few years. And so this is, although coming from all-time highs, this is a rather extreme pullback back down under 2,400. But at the same time, it's back in line with the longer term trend. So with knowing that we are at these supports, we can also see that the fat boy, our Hawkeye fat boy, which is our strength meter, is showing us that these markets are extremely oversold. And because they're extremely oversold, we're expecting them to come back into fair value pretty strongly. And usually the statistics are that when they become this oversold, they're going to be marginally moving back into the mid-range or even into an overbought range on the next cycle of energy. So we're looking for that energy to start coming back into the markets. And so we're looking at these as support areas to start looking at buying and getting back into stocks. I know it sounds painful. It's probably scary. It probably doesn't feel right. But this is, the markets are starting to show the same things here that we saw prior to the market dropping. If you look at the V-Swarm software, then you can see that the prints on our cumulative tool is showing us that the prior to the drop, we had prints of 2195, 1711, 1524, 1176. So we saw declining volume buying into these new highs. That is a sure sign of bearishness in this market. Then when we saw the bears starting to come back in, we saw huge prints coming in, but what are we starting to see now? We're starting to see a really rapid drop in the amount of selling activity, the selling pressure that's in the market, and we're starting to see extremely large price bars with non-supporting volume. Look at the size of this price bar. There's no volume supporting it. Hawkeye is here to help you see that with our V-Swarm software to understand the market swings and the conditions and to know when the time to sell and when the time to buy. So learn more about Hawkeye, get your very own software by clicking the link below, and I'll see you in the next training session. Bye for now.